the key ingredient in all of it is confidence. It's like it works partly because people believe it will work, and they're like, "Oh, you're the Fed. You're smarter than I am. You must know what you're doing." I know a lot of people at the Fed. They're not smarter than we are, or all of our listeners are. They just put on a very good front. But the front is based on confidence, and what's happening is the confidence is eroding. The Dow Jones fell 22% in one day. Not in a year, but in one day. Then tequila crisis, long-term, .com, the global financial crisis, pandemic, and now Silicon Valley. Just take the gaps between all those, add them up, and divide by the 7 or 8 crises. And the tempo is like every 7 years or so, every 6, 7 years, these things happen. It's not like, Jeremy Diamond once said, it was so rare as once since the beginning of the universe, said one chance in like 3 billion or something, or 3 trillion or something. I don't know. And I said, Jim, you must be having a really bad day. Hey, Fed, if you want to give me a low interest rate bridge loan with 80% down, I'll take all you got. So now the banks are going to do that. And by the way, because it's structured kind of like a repurchase agreement, there's no sale. So they don't have to market to market. If you sold it to a third party, a dealer, you'd have to take the loss. But now they don't have to take the loss. So they're shipping in billions and potentially $1 trillion or more of these bonds. They're not getting 80, 90 cents on the dollar, which is what they're worth. They're getting 100 cents on the dollar, which was the original purchase price.
Hello, and welcome to Crypto Street, where we bring you the latest and most intriguing stories. Now, let's begin our enlightening discussion with Jim Rickards.
At the time, it was post-2008 crisis, and I kind of came up with a 10-year tempo. I said, okay, 1998 was long-term capital management Russia. 2008 was the global financial crisis, Lehman. We all know that story. So I looked ahead to 2018. Turns out I was off by a year because the pandemic was in 2020. But the idea was that, they have bailed out everything. And go back before 1998 to 1994. If you actually start in 1987, when the Dow Jones fell 22% in one day, not in a year, but in one day, then tequila crisis, long-term, .com, the global financial crisis, pandemic, and now Silicon Valley. Just take the gaps between all those, add them up, and divide by the 7 or 8 crises. And the tempo is like every 7 years or so, every 6, 7 years, these things happen. It's not like, Jeremy Diamond once said, it was so rare as once since the beginning of the universe, said one chance in like 3 billion or something, or 3 trillion or something. I don't know. And I said, Jim, you must be having a really bad day. If the odds are that far against it, and that's what happened to you. This was when remember the London whale scandal. If the odds were that much against it and happened to you, you must be really unlucky. The truth is, those are not the right odds. That's a normal degree distribution. That's not how financial crises go. It's really a fractal pattern, and it's a power law, which means that they happen with a lot more frequency. And the right tempo is 6, 7 years. So if you go back, 2020 was kind of a one-off. It really wasn't a financial panic. It was an economic collapse because of Fauci and the rest of them. But if you say 2008, okay, 14 years, 15 years, that's a long time between crises because the tempo had been shorter. So we probably shouldn't be too surprised this is happening. But my observation was, yes, the Fed has bailed them all out. Yes, they happen with greater frequency than the statisticians will tell you. And 7, 8 years on average. This one was a little bit longer. But each bailout is bigger than the one before. And that was the key. The LTCM Russia bailout was bigger than the tequila crisis. The global financial crisis was bigger than LTCM. And this one, they just bailed out $6 trillion of bank deposits and bond holdings. Each one's bigger than the one before. So the question is, does there come a time when the crisis is so great that it exceeds the ability of the central bankers to bail it out? It's like, okay, you played your last card, but now it's bigger, and you don't, even you, Mr. or Ms. Central Banker, don't have the resources to do this. And I think we're at that point. And I would add one more observation. A lot of it, printing money, QE, bond guarantees, reverse repo facilities, et cetera, it all works to some extent. But the key ingredient in all of it is confidence. It's like it works partly because people believe it will work, and they're like, "Oh, you're the Fed. You're smarter than I am. You must know what you're doing." I know a lot of people at the Fed. They're not smarter than we are, or all of our listeners are. They just put on a very good front. But the front is based on confidence, and what's happening is the confidence is eroding. It's like, oh, you kind of, you lied to us about, Ukraine. You lied to us about COVID. You lied to us about masks. 5 million Americans who were double vaxxed and boosted got Omicron in December 2021. So wait a second, you're double vaxxed and boosted, and you got Omicron. There are 5 million or more, according to Johns Hopkins, just Americans. Don't tell me the vaccines work. Obviously, 5 million people got it. So the vaccines don't work. They do other things. It's a treatment and not a very good one at that. But we've been lied to about so many things. Now we're being lied to about Ukraine. We're being lied to about, Biden family corruption. And I don't know whether the policymakers are stupid or they think we're stupid, or maybe both, but they're wrong. The American people are at a point where they see through it. And so, and it got worse this last week, and Johnny Allen says it's not a bailout. And I just explained that it was the biggest bailout in history by far. But the American people see that. You don't need a, PhD in economics is probably a handicap at this point, but you don't need that kind of training to see what just happened. And so people don't trust the government. I mean, it's not just my opinion. It shows up in polls like Rasmussen and other polls that's very clear. So does the Fed try to pull a rabbit out of a hat, and everyone says, no, it's not really a rabbit, and you had it up your sleeve, and I see through your magician act, and it's phony. We may be at that point also. So I agree with you, or with the tenor of the question, which is that we may be at the point where we're beyond the capacity of the Fed or any central bank to do anything. And then you say, well, what next? Well, the answer is an extreme and coarse form of socialism, where you're like Argentina, where you actually are nationalizing everything.
Don't forget to join us as we explore the unfolding events. Now, let's look at the latest news in the economy. Then we turn back to Jim Rickards. BRICS summit looms, expert warns of dramatic shifts, US dollars wane, and Wall Street's blind spots. BRICS bank issues first ZAR bonds as it looks to use local currencies, US dollar to remain major global currency, South Africa's BRICS Sherpa says.
So the Swiss National Bank will bail out the depositors, but they will not bail out the stockholders. So those people are going to take a beating, and they'll probably have to take over Credit Suisse. Now, can you sell it as a going concern, sort of, to UBS, JP Morgan, as if they're not big enough? I don't know the answer to that, but you'll either have to recapitalize it and just kind of relaunch it with a new IPO as, the new Credit Suisse, keep everything the same, but wipe out the stockholders, wipe out some of the bondholders, protect the depositors, and relaunch the franchise with new capital coming from whatever, the government, or maybe Saudis will buy the new bank. And you can do that. Or we'll just go into liquidation. Hey, we're going to, protect the depositors, but we're going to sell off the assets to, sell the asset management to BlackRock and sell the investment bank to Goldman. I don't know. And then eventually, pay themselves back and undo the swap with the Fed. I'm sure they've already thought of it. Everything we're talking about has already been considered. Since 2008, banks have been required to have what they call living wills. You're told by your regulator, if you were bankrupt tomorrow, going insolvent, what would you do? What's your plan? And give it to me. And then they critique it. It's done iteratively. But so Credit Suisse has a living will. The Swiss National Bank has it. Of course, the best laid plans. You never know until you try to implement these things if they actually work or not. But so there's a playbook, and they're ready. But I don't see how Credit Suisse gets out of this, because it's not just, they got balance sheet problems, they have asset problems. This is, as I said earlier, the sharks are attacking the marlin, and there'll be nothing left except the head and the tail.
Why is Bitcoin priced down today? Let's take a quick look. Bitcoin started the weekend trading below $26,000 as the cryptocurrency had its worst week since the collapse of FTX. Market sentiment was bearish following reports that SpaceX liquidated its Bitcoin holdings. Ethereum remains below $1,700. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.